In this week's fastest 4 minutes in finance, closing the book on a phenomenal first 3 quarters of the year for the stock market and looking ahead to what might happen in the fourth quarter. Hello and thanks for joining us. I'm Scott Inman. In the face of economic data that suggests a slowdown, the stock market has soared in 2024. At the time of this recording, the S&P 500 index is up more than 20% year to date and has marked 39 all-time highs since the start of the year. There is certainly investor optimism over artificial intelligence and for a soft landing for the economy as the Federal Reserve begins to lower interest rates. Now, as we enter the final quarter of the year, what can history tell us about what might happen next? Well, first of all, September has been better than usual. The 9th month of the year is usually the weakest for stocks, but the S&P 500 is up 1.2% at the time of this recording, with less than 4 trading days left in the month. And since 1950, the September average has been negative, and it's been pretty significantly negative in the past 4 years. The index hit an all-time high even on September 19th, the day the Fed cut interest rates by 0.5%, and that is rare air. Take a look at this list from LPL Research, showing the total number of record highs hit per month. September has the fewest, with 90, barely edged out by October with only 96, and August with 97. So what do we know about stock market performance when there's an all-time high set in September? Well, LPL tells us the market is positive 91.3% of the time in the fourth quarter, with an average return of 4.8%. Now let's go beyond September. What about when the market has been positive for the first 3 quarters of the year? Well, over the last 75 years, the final 3 months of the year have resulted in negative returns only 8 times. Here's a chart that ranks the first 3 quarters of the year into quintiles. Now remember, this year the index is up 20%, placing it in the top quintile, which is up 16.4% or better. In that quintile, the index was positive 80% of the time in the final 3 months and up on average 3.5%. Now it is worth noting that the 3.5% is the lowest on the chart. The index has historically done better in Q4 if the first 3 quarters were up, but just not up as much. A couple of takeaways to wrap up. This data does not take into consideration election years. While that ultimately may not make a difference on the returns for the fourth quarter, it may make it a bumpier ride, and we do believe investors should brace for increased volatility in the weeks leading up to the election. Overall, though, there is strong momentum building because of investor sentiment for a soft landing and continued earnings growth. A reminder, the S&P 500 index is unmanaged and cannot be invested into directly. Thanks for watching.
Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.